all roads kind of lead back to London at some point, I feel.
Welcome to the InsTech London Podcast. This is Matthew Grant, one of the partners at InsTech London. And this episode, number 30, I'm talking to Bernard Goyder, who is a senior reporter from Insurance Insider. Bernard left London this April, where he'd been the Insider's technology and Insurtech reporter. We see him quite regularly at InsTech London. And he's joined the Insider team in New York. We talk about Bernard's impressions of what he's come across in the US, and in particular how what's happening in insurance and innovation compares to what he's been seeing back in the UK, and also a bit about what he's hearing from the people over there and what they think about what London's up to for insurance and technology. And then finally, we hear what Bernard is missing about being in London. Bernard, good. I guess it's good morning for you in New York. What are you up to on this Friday?
Yeah, so I'm just in the office. It's a quiet one. A lot of my colleagues at the Insider office are off today. It's Memorial Day. We've got a 3-day long weekend, and everyone's going to the beach. And it's at the start of summer, the official start of American summer. So I'm very excited about that.
We're missing you in London, but your colleagues, Mark and the others, are doing a great job at turning up to our events and keeping things moving in your absence. So it'd be really good to hear, just in the brief time you've been there, but I'm sure you've got a good perspective. I mean, what are the main differences you're seeing between the startup world, Insurtech, innovation and insurance for the US versus over here in the UK?
Sure. Well, I think there's a really interesting dynamic at play in the US because in terms of from a tech point of view, the US is really where it all started with the dot-com boom, with the creation of internet companies. It's an incredibly advanced society in general. But when it comes to insurance, it's a really old-fashioned industry in a way that I hadn't really experienced before. And one example of this, I won't actually name the company, so I'll spare their blushes, but I'm going to this conference in Texas next week and arranging some interviews, and one of these companies had raised $100 million as an aggregator for consumer insurance and renters insurance. And I was like, great, well, I might be buying renters insurance or getting quotes. So I went and got a quote on the website to see what it was like and see what the pricing was like and see who was underwriting the product as an insurance geek, but also as a potential buyer. And typed my name in, typed my number in, address in, and within seconds I had a quote about $15 a month for Brooklyn. And 5 minutes after that, my colleague's phone rang, and I must have put in the wrong number because she's now getting endless calls from a salesperson at this company who wants to do the transaction over the phone. You would never get Go Compare or Money Supermarket kind of calling you up. That is part of the sales process, but it's very much a kind of opt-in system. And if you wanted to do the transaction online in the UK, you'd always be able to on the Direct Line website or on the Hiscox website or something like that. Whereas here, there's no possibility of doing a transaction even as basic as buying rented insurance. That's why somebody like Lemonade is seen as so revolutionary out here, because it's, oh wow, you can do it on the internet. It's stuff that we've been able to do for years in the UK and we totally take for granted. Here, just because of the regulatory framework, you've got every single state is effectively a different country when it comes to insurance regulation. It just means that you can't really do any of these transactions online, and the barrier to entry is so much higher than I think it is in the European market for Insurtech.
You mentioned you'd been up to Startup Bootcamp in Hartford and seen a bit of what's going on over there, sort of firsthand.
I was lucky enough to speak to the insurance commissioner for Connecticut about the startup. They want to develop a startup hub out there, and that's what they've been doing. They've got it's not just P&C. There's also a lot of life insurers like Aetna and people like that out in Hartford. You've got reinsurance there across Connecticut. You've got companies like you're not too far away from WRB. You've got Hartford themselves. You've got the Travelers have their biggest office they've got their biggest office there in the city of Hartford. So it's a good place if you're a SaaS business, I think, to get up and close to the insurance industry and understand what they need as customers. I think it's definitely a good place to do that in. It's not the most exciting town. It's very suburban, and there's some brilliant startups there. I mean, just to probably so there's people like ClaimSpace from Australia who are just really honing the relationship between clients and the insured at the point of claim, which I think is a really good one. There was Skywatch, which were doing drone insurance. Reminded me a lot of Flock, and I think there's probably some similarities there, but they I think there's probably room in that market for more than one company, and they're fully licensed in the US, which in all 50 states, which Flock isn't. And then you had people like Pineapple, really cool South African company who are doing just gadget insurance, but you take a photo of it and then the AI works out what the object is and what the value is, and underwrites a policy on it. And I thought that was just a really smart bit of tech. And if you can actually successfully plug that into the back end, if they can get capacity from a carrier and get that up and running, then I think they'll be really successful.
Yeah, but actually hearing quite a lot about Pineapple. We had them popping up on stage. And you mentioned just in there that you spoke to the commissioner out there. I think one of the things you've written in your article that stood out was that they say that they're going to be able to go from filing to approved within 2 weeks.
In the US, if you're selling normal insurance, so home insurance or small business insurance or anything like that, the price of that cover is not set by the market. It is regulated by the state commissioner. And every year you have to file that product and that rate and get the price of that insurance approved by a commissioner, who in many states is a democratically elected position. It's not in Connecticut, but it is in lots of states. This is an elected official that will decide what price the insurance is set at. So it's a very socialist system, actually. And it's very bureaucratic. And what they're saying in Connecticut is that if you have a new product, we can launch that in 2 weeks, get it through the regulatory system.
That's going into the admitted market, is it? It's not
exactly. So that's for admitted products in Connecticut. They can get things approved in 2 weeks. One of the products that got approved there recently was Berkshire Hathaway's new business insurance thing, which is called 3, and it's called 3 because it's a 3-page business insurance policy, and they're selling it online. And I was trying to work out where this thing was licensed. And I went on the website, and an agent just popped up on a chat window. I said, "Oh, can I help you with anything?" So I was like, "Yeah, well, I'm trying to find out where you're licensed." And he was like, "Yeah, we're licensed in Connecticut and 3 other states. I think Texas was one of them." And so that's partly they obviously would have chosen those states because there's a market there, but also because it's easy to get the paperwork done and test things out. And then once you have a good product, you can release it across all the other states.
Oh, that's really interesting. So that's the reason for Hartford being the hub. So you kind of start them there, incubate them, prove it works. And
it's a chicken and egg thing, to be honest. It's we don't know whether it's hard to say whether I think it makes sense for the regulator there to be responsive because there's a lot of insurance companies there. It's the same way like Pittsburgh is a steel town or Detroit's a car town. Hartford in Connecticut's an insurance town.
Yeah, as you said, less distractions in Hartford than there might be if you're trying to do the same thing in London. You mentioned in one of your articles recently, I thought you put the headlines, Lemonade wants to dominate insurance. And I'm not quite sure if they've been reading the press or they just don't care, but domination seems to have sort of fallen out in favor in terms of how Insurtechs or startups talk about themselves. But do you think that they're just being a bit provocative, or are they being naive, or are they taking on the world?
I think they are already dominant in renters insurance, and I don't think it's a huge jump to see them also be a significant force in areas like homeowners. I don't think they'll do auto. They could certainly do small business if they wanted to. I think they're being quite what one on the outside seems like quite a kind of radical, expansive, aggressive strategy. For Dan and the Lemonade team, they see it as perfectly rational. What they're saying is, if we can get a 1% slice of the global homeowners market or the global renters market, then that's a massive. We can be a big company.
And you mentioned the combined ratio is coming down from 319% to 116%. So they've got a sort of route to profitability now.
I think they don't care so much about profitability in that traditional sense. And this has always been a bit of a bone of contention. If you've followed Matteo Carboni and Adrian Jones's blogs about Lemonade, for instance, they will always point out that, well, they kind of slightly fiddle the expense ratio because they take out some things. And Lemonade have come back with saying, oh, we've just set up the numbers in the way that the regulator in New York has told us to. We're not doing anything any different to anyone else. It's just People don't normally dig into the kind of financials of insurance companies in the same way they should be necessarily, and that's what we try and do here at the Insider. But yeah, I think they're certainly, the great thing about Lemonade from a business point of view is that their expense ratio is so low because so much is automated, and if they can combine that with smart underwriting and get a better underwriting ratio, and obviously they're giving a lot of profits away to charity as well, then yeah, they can certainly be a successful business, I think.
What are you hearing, if anything, about the people you're talking to about what's going on in the UK or Europe, either from perspective of the capacity through Lloyd's or some of the other local markets here, but also on the technology side? Does it register at all when you're talking to people?
I went to drinks with some brokers in New York my first couple of weeks, and people were really excited by it when I told them about PPL, which is this digital system that's used in the London market and has been that Lloyd's have forced brokers to use to push business into Lloyd's. And that kind of idea of having a single insurance market where you use a single insurance platform to push a risk through would actually be totally revolutionary for the commercial insurance market in the States. Here, everyone uses a different system and has a different way of getting risk to you. And if you're an agent or you're a broker, you have to handle these different systems. Or you might be tied. You might be a tied agent, and you'll only work with Farmers or work with Progressive or somebody like that, and you have their sign above. They have their name above your shop, and then you only need to worry about one system. But the idea of an insurance market at all, really, it only really exists probably in Miami for the Latin American reinsurance market. Is the only place that truly exists in the US, and there may be a few kind of marine markets and stuff, but I think they see London as incredibly high tech and incredibly sophisticated in terms of insurance. Indeed, that's where, if you want to buy terrorism insurance, or if you want to buy serious liability insurance, or if you want to buy anything like cyber insurance, you have to go to the London market because it's only available in excess and surplus lines, and Lloyd's and the London market has a dominant position in excess and surplus lines. So yeah, Lloyd's it's not obvious, but if you slightly look under the surface, who's backing this MGA, or who does this broker deal with, which wholesale broker are doing it, you can, all roads kind of lead back to London.
That's both capacity and technology, or do you think it's just more driven by traditional Lloyd's appetite for that non-admitted market, or is it technology? Are the technology in the sense of innovative ways of pricing and assessing data and risks, is that also seen as something that's happening in London, or is it just purely a capacity play? Sure,
I think certainly on a capacity play, you've got to look at the reinsurance market as well, and that's had people like Munich Re backing Insurtech. That's been huge. But in terms of technology, my point is that there's been nothing like the target operating model happening in the US. There's been no systematic. There have been attempts, but no one has successfully rallied the entire industry around a kind of modernization piece, which leaves them more vulnerable to an extent for disruption by startups. So I think this idea that you have an API, you have like a software platform that anyone can access, or you can plug in and you can white label it and other people can access it. From a distribution point of view, that's going to, I think, be really important for commercial insurance out here in the next couple of years.
Because the Guru actually that's a good success story, given that they came out of startup boot camp in London, and then back in the US.
A company that's like kind of is a really great example of a company that has played the kind of jumping between different locations and different geographies really effectively and really well. They didn't seem kind of they're very, because with a company like that, you can say, we're a Silicon Valley startup, or we're an East Coast startup, or we're a London startup, and you can almost and all of the above are true with a startup like Zaguru. They're in different places at different times. They seem to be all over the place. They've got a clear mission, which is saying, okay, we're going to make it easier to do for you to buy cyber insurance, and we can do the kind of have a risk assessment that gets plugged into that. And that's the key thing, really. And that's the big thing that's going to change with the whole industry, especially with Internet of Things coming in. I think you're going to see a lot more of the kind of risk consultancy side of it's going to become increasingly important, because that gives people a really clear link between, if you want to reduce your premiums, then you need to do more. And you're seeing that a lot on the health tech side in the US. Anything
you miss about being in London when you're over in?
The pubs. The pubs here are dreadful. They don't really do pubs to the same extent, and they don't have enough toilets as well in the pub. So I miss British pub toilets. I know, I thought I'd never say that.
Good. Well, the word's Mark to see if you can figure you out your own personal mobile toilet, so you at least don't get caught short. Well, but that was great. Look forward to catching up again soon. And I guess anybody wants to come across your writing, you are, I guess,
InsuranceInsider.com. Yeah, we're at InsuranceInsider.com. You can follow me on Twitter at Bernard Goyder, or you can hit me up on LinkedIn. Just type on Bernard, and I should appear at some point. And yeah, it'd be great to hear from you if you've got any feedback, and just let us know. Feel free to get in touch.
Brilliant. Well, enjoy a long weekend. Many thanks.
Thanks.
Well, that wraps it up for this week. If you haven't already discovered our previous podcasts, you may find something of interest in those. We are now podcasting weekly. If you want to learn more about what we're doing at InsTech London, and learn in particular about how you might be able to get involved, whether you're from insurance or technology or indeed anywhere else, you can find out more at www.instech.london. Learn about our past events, our future events, and also subscribe to our newsletter.